In financial planning, understanding tax implications is crucial. It's about preserving and maximizing wealth. Financial advisors guide clients to minimize tax liabilities and optimize outcomes. Tax planning requires knowledge of various tax types, rates, and regulations. Advisors must stay updated on tax laws to provide accurate advice. This guide covers South Africa's tax system, equipping advisors with essential knowledge. By the end, advisors will be empowered to help clients achieve financial goals while minimizing tax burdens. South Africa's tax system is a complex web of legislation and regulations. Key taxes include income tax, capital gains tax, donations tax, and estate duty. Income tax is levied on income earned by individuals and entities. Capital gains tax is imposed on profits from asset sales. Donations tax applies to gifts exceeding a threshold, and estate duty is payable on deceased estates. Understanding these taxes helps advisors guide clients toward tax-efficient strategies. Tax laws evolve to reflect economic changes and policies. Recent amendments in South Africa include new regulations for digital assets and adjustments to retirement fund rules. These changes impact financial planning and require advisors to stay informed. Advisors must understand these developments to optimize client strategies. Staying updated ensures clients benefit from the latest tax provisions. Income tax is the bedrock of South Africa's tax system. It's a progressive tax, meaning higher earners pay a larger percentage. Calculating income tax involves determining gross income and applying deductions. Advisors help clients understand their tax obligations and identify potential deductions. This ensures clients meet their obligations while minimizing liabilities. Effective tax planning maximizes financial efficiency. Beyond income tax, advisors must understand capital gains tax, donations tax, and estate duty. Capital gains tax is levied on profits from asset sales. Donations tax applies to gifts exceeding a threshold impacting estate planning. Estate duty is levied on deceased estates, affecting wealth transfer. Advisors guide clients on strategies to minimize these taxes. Understanding these taxes is crucial for comprehensive financial planning. South Africa also levies indirect taxes like VAT transfer duty and securities transfer tax. VAT is a consumption tax collected at each production stage. Transfer duty is payable on property transfers, typically borne by the buyer. Securities transfer tax is levied on securities transactions. Advisors must consider these taxes in financial planning. Understanding indirect taxes helps optimize investment returns. Understanding tax-paying entities is crucial in taxation. Entities include individuals, companies, close corporations, trusts, and deceased estates. Individuals bear direct tax burdens on income and capital gains. Companies face corporate income tax, while close corporations are taxed at individual rates. Trusts manage assets for beneficiaries, with income taxed in beneficiaries' hands. Advisors navigate these complexities to provide tailored tax strategies. Companies and close corporations face unique tax obligations. Companies are subject to a flat corporate tax rate, while close corporations are taxed at individual rates. Tailored tax strategies are needed based on the business structure. Deductions and allowances play a significant role in tax planning. Capital gains tax impacts asset disposal strategies. Advisors guide businesses to maximize tax efficiency and minimize liabilities. Trusts and deceased estates present unique tax challenges. Trust income is taxed in beneficiaries' hands, requiring careful planning. Deceased estates face estate duty, impacting inheritance. Effective estate planning can mitigate estate duty liabilities. Both trusts and estates are subject to capital gains tax on asset disposal. Advisors manage these complexities to optimize tax outcomes. Understanding tax jargon is essential for financial advisors. PAYE requires employers to deduct income tax from salaries. Taxable income is the portion of income subject to tax after deductions. Fringe benefits are non-cash benefits added to taxable income. Advisors must be fluent in these terms to provide accurate advice. Mastering tax terminology ensures effective financial planning. Income tax comes with specific terminology and concepts. Gross income includes all income sources before deductions. Deductions reduce taxable income, specified in the Income Tax Act. Common deductions include medical expenses and retirement contributions. Rebates provide direct relief from tax liability. Advisors must understand these concepts to maximize tax efficiency. Capital gains tax involves key terms like base cost and disposal. Base cost is the original purchase price adjusted for improvements. Disposal triggers CGT liability, such as asset sales or donations. Capital gain is the profit from asset disposal included in taxable income. Advisors guide clients on strategies to minimize CGT liabilities. Understanding CGT terminology is crucial for effective tax planning. South Africa's tax landscape is constantly evolving. Recent changes include the Taxation Laws Amendment Act of 2023. This act introduced changes to retirement fund regulations and corporate tax rules. Advisors must stay updated to provide accurate advice. Understanding legislative changes helps identify tax-saving opportunities. Staying informed ensures clients remain compliant and optimize strategies. Section 2. Renewable energy incentives, a bright spot in tax reform. In a bid to address the country's energy challenges and promote sustainable development, recent tax legislation has introduced a range of incentives aimed at boosting investment in renewable energy sources. These incentives provide significant tax breaks for individuals and businesses alike, making renewable energy more financially attractive. One such incentive is the rebate for new and unused solar photovoltaic panels installed between March 1, 2023 and March 1, 2024. This rebate allows taxpayers to claim back 25% of the cost of the PV panels, up to a maximum of £15,000. This initiative aims to encourage homeowners and businesses to switch to solar energy, reducing reliance on the national grid and promoting clean energy adoption. Furthermore, the legislation has enhanced the existing deduction under Section 12BA of the Income Tax Act for certain renewable energy investments. This enhanced deduction allows businesses to claim a 125% deduction on the costs associated with qualifying renewable energy projects, including solar, wind, and hydropower installations. These incentives present a win-win situation for both taxpayers and the environment. Individuals and businesses can significantly reduce their tax liabilities while contributing to a greener future. Financial advisors play a crucial role in educating clients about these incentives, assisting them in assessing their eligibility and incorporating these opportunities into their financial plans. Section 3. Retirement Fund Reforms, Balancing Savings and Accessibility. Retirement fund regulations have undergone significant changes in recent years, aiming to strike a balance between encouraging long-term savings and providing individuals with access to funds in times of financial hardship. The Taxation Laws Amendment Act of 2023 has introduced further modifications to this landscape, impacting how individuals plan for their retirement. One of the most significant changes is the introduction of the two-pot retirement system, set to take effect from September 1st, 2025. This system mandates that a minimum of 2/3 of any retirement fund must be preserved for retirement purposes, ensuring individuals have sufficient funds to support themselves during their golden years. However, recognizing that unforeseen circumstances may arise, the new system allows individuals to access up to 1/3 of their retirement funds before retirement. This provision provides a safety net for those facing unexpected financial challenges such as job loss or medical emergencies, without jeopardizing their long-term retirement security. These changes to retirement fund regulations necessitate careful consideration and expert guidance from financial advisors. Advisors need to educate their clients about the implications of the two-pot system, help them develop a retirement savings strategy that aligns with their individual needs and risk tolerance, and ensure they understand the rules and limitations surrounding early withdrawals. Section 4. Corporate tax adjustments, fostering business growth and investment. In a bid to stimulate economic growth, attract foreign investment, and enhance the competitiveness of South African businesses, recent tax legislation has introduced a series of adjustments to corporate tax rules. These changes aim to reduce the tax burden on companies, encourage investment in innovation and expansion, and create a more favorable business environment. One notable change relates to the treatment of third-party backed preference shares. The new legislation clarifies the tax treatment of these financial instruments, providing greater certainty for investors and businesses alike. This clarity is expected to attract more investment capital into South African companies, fostering growth and job creation. Furthermore, the legislation introduces modifications to the Urban Development Zone Allowance, a tax incentive designed to encourage investment in designated urban development zones. These modifications aim to make the allowance more accessible to businesses, stimulating economic activity and revitalization in these areas. Additionally, the legislation includes adjustments to the rules governing distributions from South African trusts to non-resident beneficiaries. These changes aim to prevent tax avoidance while ensuring that South Africa remains an attractive destination for foreign investment through trust structures. Section 1. Case studies applying tax principles to real-life scenarios. Theoretical knowledge about tax laws is essential, but its true value lies in its practical application. To bridge this gap, let's delve into a few case studies that illustrate how financial advisors can apply tax principles to real-life scenarios, helping their clients make informed decisions. Case Study 1. The Young Professional. Sarah, a 30-year-old marketing executive, seeks advice on maximizing her long-term savings while minimizing her tax liability. She earns a taxable income of 500,000 Rand per year and is considering increasing her retirement annuity contributions. As her advisor, you could guide her on the tax benefits of retirement fund contributions. Explain how contributions to retirement funds are tax-deductible up to a certain limit, reducing her taxable income and consequently her income tax liability. Illustrate how increasing her contributions can lead to significant tax savings over the long term, compounded by the tax-free growth of her retirement savings. Additionally, you could discuss the benefits of diversifying her investment portfolio beyond retirement funds, considering tax-efficient investment options such as tax-free savings accounts. By illustrating the potential tax savings through practical calculations and projections, you can empower Sarah to make informed decisions that align with her financial goals. Section 2. Tools and resources, equipping advisors for tax-efficient planning. Navigating the complexities of tax laws and regulations requires more than just theoretical knowledge. It demands access to reliable tools and resources that facilitate accurate calculations, informed decision-making, and efficient tax planning. Financial advisors have a wealth of resources at their disposal, ranging from sophisticated tax software to comprehensive online databases and publications. These tools empower advisors to stay updated on the latest tax laws, perform complex calculations with ease, and access a wealth of information to support their clients effectively. One invaluable resource is the South African Revenue Service (SARS) website, which provides a comprehensive repository of tax laws, regulations, guides, and forms. Advisors can access the latest tax tables, find answers to frequently asked questions, and stay informed about any changes or updates to tax legislation. Additionally, several reputable financial planning software programs are available, offering features such as income tax calculators, capital gains tax calculators, estate duty calculators, and retirement planning tools. These software programs simplify complex calculations, provide accurate projections, and generate customized reports, enabling advisors to deliver comprehensive and insightful financial plans that incorporate tax optimization strategies. Section 1. The enduring value of tax expertise in financial planning. In the ever-evolving landscape of personal finance, where market fluctuations and economic uncertainties are the norm, one thing remains constant: the profound impact of taxes on financial well-being. As we've explored throughout this comprehensive guide, understanding South Africa's complex tax system is not merely an option for financial advisors, it's an imperative. From the intricacies of income tax calculations to the nuances of capital gains tax, donations tax, and estate duty, each facet of the tax code presents both challenges and opportunities. By mastering these intricacies, financial advisors don't just guide their clients through a maze of regulations, they empower them to make informed decisions that optimize their financial outcomes. The knowledge and tools shared in this guide equip advisors to be more than just financial planners. They become trusted partners, helping their clients navigate the complexities of taxation, minimize their tax liabilities, and achieve their financial goals with confidence and clarity. As tax laws continue to evolve, the role of a financial advisor becomes even more vital. By staying ahead of the curve, embracing ongoing learning, and utilizing the resources at their disposal, advisors can ensure their clients remain on the path to financial success, no matter what challenges the future may hold. Thank you for watching. If you found this guide helpful, please like and subscribe to SCOCO Academy for more insightful content on financial planning and tax expertise.